are in the QBO gym, and this is the place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you each month, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's get into today's exercise, which is being pulled from our June Year 1 Cool Down section. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner and your client. Below that is an interactive pre-assessment quiz that relates to the video up above. Below that are the exercises in this section. And at the bottom here, after you have gone through all of the exercises in this section, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's get into today's exercise where we're going to practice dating inventory. Go ahead and click on that link to have it pulled up for you. I have it here on the right-hand side of my screen, so let's read through the scenario. It's the end of the month, and so you need to grab the bank statements and reconcile accounts. You'll create a P&L and balance sheet for Craig, but before you do that, you need to adjust the balance sheet inventory value to accurately reflect his cost of goods sold and inventory on hand. Remember, this is periodic inventory. You're not relying on QBO to constantly keep track. So Craig has also counted what inventory is left over this month and provided you with a report. You will need to be in the same session of the sample company that you did all of the previous exercises in. If you have not completed those 4 exercises, be sure to click on the link on the top right corner of your screen. That'll take you to the first one, complete that one, and all the ones after that. They all build on each other, so it's really important you start with that first one. I have the sample company here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's go ahead and get ready and do this exercise. We're first going to talk about this inventory formula. When calculating the cost of goods sold, or COGS for short, use the following formula. Starting inventory value minus ending inventory value plus purchases equals COGS. In this scenario, Craig's starting inventory is 0. But what is the ending inventory value? Because this is periodic inventory, the only way that we know is for Craig to manually count it. He did so and discovered that he has 13 ducks left, which he purchased at $1.90 each, and 2 lawnmowers left, which he purchased for $120 each. So if you do that calculation, that 13 times $1.90 plus the calculation of 2 times $120, you will get a total of $264.70. For the purchases, you can look that up in QBO. Luckily, you previously set up an account to show exactly that. So we're going to go to the accountant tool, or click on accountant tools and then click on chart of accounts to get to that page. Accountant tools is on the top of the screen. Click on that. And then under quick links, select chart of accounts. We want to scroll down to find the account that is purchases retail account that we set up on a previous exercise, and then click run report. So we're going to scroll down. This one is inventory refill. We want purchases retail. I'm just going to keep on scrolling down. Keep scrolling down. It's a little bit of a ways down. So here's what I'm going to do instead. I'm going to use this search bar right here just to make it a little bit easier and find purchases. There we go. Much easier to find it that way. So once you do find it, if you want to do it the same way that I did, you would just type it in the search bar here. And then once you find it, go ahead and click on the run report. And you will likely get this pop-up screen about this new modern view. You can go ahead and just click on got it or the X. QBO in this current moment is changing over a lot of the view of their reports from what they call a classic view to what they now call modern view. So it's just giving some information about what's going on there. All right, so the resulting account drill down quick report, formerly referred to as the transaction list, shows all of the transactions for this account since 90 days ago. As you can see, if I scroll over here, the total is $828. This is what we're going to use for the formula, so keep that in mind. This is that, those are the purchases that were made. So in a real life scenario, you could adjust the dates to the period that you were looking for by clicking on since 90 days, this drop down here, and selecting or entering a different date range. But everything is good here. The only purpose that we did this for is so that we could see the amount of those purchases. All right, so let's move on to making that journal entry. You will use the described formula in the journal entry to add both the inventory retail account, which holds the value of the current inventory or that ending value inventory, and then the cost of goods sold, which is those purchases. So let's go ahead and click on the plus new button and then select journal entry. The plus new button on the top left corner, click on that. And then under other, go ahead and select journal entry. In the journal number field, we're going to type inventory adjustment month with adjustment being abbreviated. So delete what is currently there and then go ahead and type in inventory adjustment month. Note that it's always good to name your journal entries so that you can easily find them later if necessary. If you're looking for journal entries and you're just searching through a list of journal entries, having this as a little bit of a description is easy for you to identify what this one is all about. And if I click out of that box, you will see that now the name has been updated here. So on the first line in the account field, we're going to select inventory retail. So click into that. Go ahead and start typing inventory. If I can spell it correctly. There we go. Inventory retail is the one that we want. In the debits field, we're going to type $264.70. So click into that. Type $264.70. Do you remember how we arrived at this number? You can always check the inventory formula tip above if you need a reminder, which this is that ending value inventory. But don't forget that the debit column is for the destination of the funds. That's what this one is for. So on the second line in the account, we are going to click on purchases retail. So click into that, go ahead and type in purchases, and then click this one, the purchases retail. QBO is automatically going to assume that what we want here in the credits column is the same as the debits because debits and credits must always equal each other. But since that's not the amount that we saw on that report, the total for the purchases, we need to make this adjustment. So in the credits field, we're going to type 828. So delete what is currently there, type $828. And as a reminder, do you remember how we got to this number? Remember, it was from that report, it was the purchases that were made. So note that the purchases retail is only a temporary account used to hold the funds until they go through the process or until you go through this process. When you're finished here, it will be zeroed out as the funds are distributed to the two other accounts. So now we need to do this for the cost of goods sold. So on the third line in the account field, we're going to select cost of goods sold. So click into that. Once again, I'm just going to start typing in cost to get cost of goods sold. Once you find it, go ahead and click on it. Now note that QBO has already done the math for you regarding the value of this account, which matches the formula previously introduced. That starting inventory value, which was 0, minus the ending inventory value, which is this one right here, plus purchases, which is right here, is the final number here for the cost of goods sold. So our journal entry is all correct. Everything is balanced and distributed properly. So now we just need to click on the green Save and Close button. So go ahead and do that. And now that journal entry has been saved, and that is it. That is how you would update inventory. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We have one final exercise to do here in the cool down section. So if you would like to continue on, be sure to leave this session of the sample company open as we practice running reports. And I will see you in the next video.